Very good evening to all of you. This is Business Today, your weekly business roundup brought to you exclusively on Channel I. And today is 1st of November 2017, first day of a brand new month. So let's welcome this month as a gift and an opportunity to do what you couldn't finish yesterday. So be focused and be yourself, start as you got just 2 more months to complete and finish this year. With that in mind, we will start things off for tonight, and let's move on to Business Personalities segment. Right. Today we got a very special guest, a distinguished guest, and I will give you just one clue and you will know who he is. He's an economist and politician and still practices economics in politics. So let's straight away move into the introduction clip to welcome our guest for tonight.
Dr. Harsha De Silva entered Parliament in 2010 on the UNP national list following a successful career in the private sector as an economist, development banker, international consultant, and entrepreneur. He was a vociferous member of the opposition and was its economic affairs spokesperson. Subsequently, in August 2015 he was elected from the District of Colombo and was appointed Deputy Minister of Foreign Affairs. He led the reorientation of Sri Lanka's foreign policy towards economic diplomacy and was instrumental in regaining the GSP Plus trade concession to the EU. In June 2017, Dr. De Silva moved under the Prime Minister as his Deputy Minister in his portfolio of national policies and economic affairs. Dr. De Silva has a PhD in economics from the University of Missouri and has had executive training at MIT. He has taught at universities in the US and Sri Lanka, and has several international publications on technology and development. He was a 2011 Eisenhower Fellow. He is married with 2 children.
All right, and he is Honorable Dr. Harsha De Silva, Deputy Minister of National Policies and Economic Affairs. A very good evening to you.
Good evening, good evening.
And let's keep aside the politician in you for a moment and let's explore the economist in you today.
Sure.
All right, so you're a well-known economist in Sri Lanka, and you hold a PhD in economics, and also you are a graduate in management, business management. So this is quite a rare combination for a Sri Lankan politician. So let's start our conversation by talking a little bit about your educational and professional background.
Well, nothing really much to talk about. Okay. I studied economics, and I wrote a thesis on finance. Right. Interestingly, I also did the coursework for a MSc in finance. I started out as chief economist at the DFCC. At the time it was called Development Finance Corporation of Ceylon. Thereafter I left, and with another person started a small research company that was looking at filling a segment that was not filled. No. And that was particularly on trade research, on the consumer side. People were doing, research, market research on, particularly consumer research on, about user experiences and attitudes and things like that. But people had completely missed out the trade side, with the distribution side, and the off-takes, pack sizes, things like that, competition among brands at the retail store level. Right. So that's what we wanted to fill, and we started this country's first retail audit. It was a big exercise, and when I want to leave DFCC Bank, Mr. Praelis at the time told me, Harsha, you're mad, you're leaving this bank. You're the youngest in management, you can one day become the CEO perhaps, don't go. And I said, no, Mr. Perez, I'm done. I was here with you for 3 years. I learned a lot. It was amazing experience because at the time DFCC didn't have a treasurer, and I was the economist. And suddenly, it's a long story, but the credit lines, that's the the World Bank and the ADB, stopped the credit line to DFCC and to NDB, and suddenly there was a huge mismatch of assets and liabilities, and they were borrowing, in the short term, in the money market, and lending long term, and the interest rates were going up. And I remember I was, looking at what the problem was. We realized that interest rates in the morning would be 20%. By midday, it would be 30%. Seriously.
Right.
And then one day I was asked to come to the boardroom, and I was really, so why are they calling me? And said, well, from tomorrow you're treasurer. I said, well, I'm not an accountant. Then he said, we're not looking for bean counters. We have enough of them. Sorry, Mr. Nagaraj. But then that was a challenge. And I took the challenge on, but at the beginning it was enormous, because I remember days where before I went to work, believe me, this is true, this is about, mid-90s, 90 would have been 20 years ago, right? The rates, interest rates, we would borrow at 30, 40, 50, and the day it hit 106%, that was overnight money. I remember,
Rates.
yeah, somebody called and told me, by the time I had done some interesting transactions, and I was on the lending side from being on the borrowing side. We did some long-term deals with National Savings Bank. We went to FMO, DG, Germany, elsewhere. We got some money, and we had stabilized ourselves. And I said, let's make some money. Somebody called and said, you have some money, Harsha. I said, how much? I think it was a small amount in treasury terms, like something like 50 million rupees. And I said, let me open my drawer. I was just joking. Huh? I don't have any money.
Right.
So borrow from the markets, but if you pay more than 35%, you're called up by the Ghana Central Bank and sort of told you're not supposed to do that. I was going too long.
You just mentioned that there's nothing much to talk, but we understand there's quite a long story, a big story, a major success story for us to talk about. Since we are on a constant battle with time, and since we have so much to talk with you, I will move on to the next question.
Yeah, but since it's like business show,
Yes.
and because you said I have a slightly odd combination, I'll forget that story, and to say that interest rates hit 106% that day. And to me, sitting here today, in my ministry, I realize, because I practiced this, I know what it is. So I don't see things only as a politician or an academic, but I also see it as a business person or someone who's sort of had experience in running these things. And then, I'll fast forward, and we set up this company, and we grew that company from about 4 people to 140 people or something like that. And we sold it, and today it's a large Sri Lanka's leading sort of market research company, now fully owned by American company. And then I worked for 10 years after that with the World Bank, ADB. I worked in multiple countries, and then later came into politics. So that's kind of my
very
thing.
interesting. And in terms of economic growth, the overall expected growth is about 4 to 4.5% within the next couple of years. What are your thoughts on these expectations?
You see, Sri Lanka actually did grow at about, it hit a peak of 9.1% after the war, 2012. But then 2013 it came down to 3.5%, and 2014 was only about 4, over 4, and 2015, 16 even 17 is going to be in that region, 5% or so, which is not enough. The reason why this happened is we had an unsustainable model. The 9% growth came from heavy borrowing poured into infrastructure. So it's debt-fueled construction-led growth, which is non-tradable growth, which is not sustainable. Right. What we need to do is to create a tradable economy where we can produce and sell to the bigger market, and that is how we are going to have sustainable growth. So we have to turn the ship around from being a non-tradable, debt-fueled, state-led, construction-driven growth to more investment-driven, tradable, and export-led growth model. So that is what we are doing. And also note that agriculture is growing at negative rates, which is bringing down the average growth rate, because others are industry and services. So even with these droughts and all that, we are holding on to these levels. But with the rains coming, agriculture turning around, I am a little cautiously optimistic that we might see better growth at the end of the year.
Right. From a perspective of an economist, what needs to be done to accelerate economic growth and, as you said, to move towards a dynamic market-based trading economic model?
Yeah, I mean, we need reforms. Essentially, we need reforms. Reforms must come particularly on the trade side. You see, if you go back and look at the history of this country, people must read K.M. De Silva's History of Sri Lanka, which takes you through centuries of this country, what happened, how we made the right calls at some times, how we made wrong decisions, and how we missed the bus, essentially, and how we didn't really seize the opportunity. In the 70s, the early 70s, when who we call the tigers of Southeast Asia really started taking off, and through their reforms, the second generation, third generation reforms have been able to sustain, close to 10% growth. And you see, even China opened during Deng Xiaoping's time, 1970s, late 70s, grew 10% for 30 years, because they were willing to do the reforms, the hard reforms. Sri Lanka's reforms were never completed. Jayawardena started the reforms, created the market economy. Suddenly people started seeing a world outside of that box, where I remember as a schoolboy we had to stand in the canteen in the Royal Primary School to receive our measure of blue kerosene smelling shorts material and the white shirts. From that, to what we saw subsequently. And no one has really said, anyone who's been in government, in office, tried to change that. But people have not had the courage to go ahead and complete the reforms. So unless we complete these reforms, growth is going to slow. And trade I was talking about, when I was in the opposition, I used to tell the former president, look, every time I used to go for finance committee meeting, that exports are falling.
Yes. It's just going to come there as looking at imports and exports, we see our trade deficit widening, and with more and more imports coming into the market. So how do we reorient our exports and improve in order to move towards a dynamic economic model and to be competitive under global market conditions?
Yeah, so that's what I was saying. The reforms, I was saying, let's look at the trade reforms first. See, because, believe me, this is true. The World Bank had done a study and we were looking at it the other day. Sri Lanka's openness and the involvement of the private sector openness measured by exports or trade to GDP, and involvement of the private sector, looking at the level of investment in the private sector in capital formation. Sri Lanka was as closed in 2014 as it was in 1970. See, we've gone backwards particularly in the last 10 years or so. That in 2000, right, we exported 33% of our GDP, right? Nisanga, we are a small country. Yes. Our market is 20 million. It is like saying we are restricting our business to Matara. You know how much, you can't just sell in Matara. If you want to be a businessman, Matara kades were opened all over in Jaffna, right? That is why the Matara business people went everywhere, you know, and they created wealth and became rich and very simple. So you just take that example. We have to capture a bigger market, right? So if exports to GDP fell from 34% in 2000 to 13% in 2014, then you realize you are going the wrong direction. So you have to turn that around, right? And some people think imports are bad, only exports are good. But what we are trying to create is trade. So you import, you add value, and you export. People must get it through their heads that it is both sides of one coin, right? Importing and selling here is one thing, but importing and removing the barriers to import by or rather creating barriers by putting all these cessors and para tariffs and all that, just makes the export product non-competitive, less competitive. In the world today, what you see are what are called global production networks. This iPhone is not made in America. There are some 12 countries that produce various pieces of this, and it gets assembled in Foxconn, Taiwan company in Shenzhen in China, right? So what happens is borders must be more open for trade, and we are not talking of export only, we are talking of trade. We have to do the reforms. There are so many other things we don't have time to get into, but the most important one is doing the trade reforms, and you'll see our intention, which we articulated in the Vision 2025 document, reiterated in the speech made by the Prime Minister a week and a half ago in Parliament. You will see Mangala expanding on it for the next year, and you will see how we are actually going to make some real reforms in trade.
Right. So, as a strong proponent of free trade, you were also pushing for stronger trade agreements with the United States, and with President Donald Trump not being so favorable for multinational trade deals. What is our position, and what is our position with Trans-Pacific Partnership right now?
Yeah, so the Trans-Pacific Partnership, or the TPP, is now for the moment either in cold storage or it is dead. So TPP might get it'll reinvent itself without America if Trump doesn't want to do it. Trump is also talking of changing or scrapping the NAFTA, which is the trade agreement between America, Canada and Mexico. Now this also gives us an opportunity, RCEP, or the Regional Comprehensive Economic Partnership led by China. Or we are also looking at trying to see if we can use the Commonwealth framework, right? Even in the current context of Brexit, where the UK has left the European Union, and us as Commonwealth countries, whether we can use that framework to build on as a trade sort of region. We are sitting in the most dynamic region of the world for the next 25 years or longer. Wealth is going to be created in the Indian Ocean. Trade is going to flow from the East African ports to the Southeast Asian ports. And if you look at, visualize it, it is the Indian Ocean. And what is the center of that Indian Ocean? Sri Lanka, right? So after Parakrama Bahu's time in the 12th century, I think we have a tremendous opportunity now to leverage that position, and this is the Asian century. This is the time for us in the Indian Ocean. So let America grow at its rate. American global share of GDP is currently about 18%. By 2030, it is expected to come to about 13%. And China, which is now at around 18%, is expected to go to about 30%. India, which is about 7%, is expected to go to about 15%. So you see what's happening is, okay, fine, let Americans, we need to trade with them. They are biggest export partner. They buy most of our stuff, particularly apparels. We appreciate the market. We have got GSP to America. We recently got massive trade concession, people don't know it, on leather goods and bags and things like that, backpacks and things like that. The duty of, I think, close to 20% was taken off. Then we have, as the little trailer showed, we are back in business in the European Union. For 28 countries in Europe, we can export 6,600 products completely duty-free. I mean, this is a tremendous opportunity. So while those markets are mature and will continue to serve us, we also need to start looking at other markets, right? The middle class that is coming up in this part of the world. And also, more than anything else, to serve as the hub of this dynamic region where wealth is going to be created.
Right. So can you also talk about the proposed Colombo International Financial City? What is this all about, and what are the benefits investors would get in this special economic zone?
See, we inherited this. Originally, in the opposition, we opposed it because there were multiple issues, security concerns, environment issues. So when we came, the project was suspended, and over the period it was suspended for about a year. Government and the project company, China Harbour Engineering Corporation, renegotiated this whole agreement. Now we feel, okay, it's good to go. Numerous changes, and one of the biggest changes we made was that instead of selling 50 acres of land, the reclaimed land, we agreed to have a lease agreement with the company. And the project company will have, I think, once it is done, it is about 560 acres. They will have about 200 acres, and we will have some 100 and odd acres, and there will be a whole lot of public space, parks, recreation areas, lakes. And what we envisage is this to be an oasis, right? It is not just a financial city. The financial city will be in a part, right? And we don't even know what banks are going to look like with cryptocurrency and blockchain and all that. W.A. Vijayawardena had written a superb article in the Financial Times this Monday. I haven't had the time to read it, but people watching this must read to see where we are moving. You know, the pinstripe suit, briefcase carrying gentlemen and a few ladies, bankers, may not exist in the years to come, right? It will all be artificial intelligence and computers doing this work. So we must think not for now, We must think for the next 25 years, you know. And I see this panning out to be a more knowledge, tech, entrepreneur, and also real estate. You know, we'll have good top class residences, you know, $5 million homes if you want to buy, you can buy. Right? If you want to get good school, we are setting up schools, hospitals, it's going to be an oasis. And we want Sri Lankan folks who are working overseas in Boston and in New York, in Sydney and Melbourne and London and Dubai to come, and you'll get paid well. We are giving sufficient concessions if you are particularly a tech company to be able to claim back some of the expenses on salaries and things like that. Very out of the box kind of solutions. It'll have yacht marinas, it'll have entertainment, it'll have, we hope Michelin star restaurants, the whole works. But one thing I said is, let's not do it if we can't try to place it in the top 10 doing business places in the world. Right. We are 110. It's not good. Right. But so we can have a sort of a policy lab here. Right. And it can percolate to the rest of the country.
Right. I think we can continue this conversation for many hours, but unfortunately we got to wind up for now. Thank you very much for being with us. It was indeed a great honor having you today with us.
Pleasure.
Right. With that, we will move on to a short commercial break and we will be back with you soon. Stay tuned. Right. Welcome back to Business Today, and as we are now ready to move on to our next and final segment, we hope to talk about a specialized unit. So let's first connect with the stock market segment to proceed further. All right, we told you that we will talk about a specialized unit, and this is known as the nerve center that deals in liquidity management, capital and money market products, and forex products in financial institutions. And our topic is going to revolve around treasury, and we have with us Mr. Indrajit Boyagoda, Deputy General Manager, Treasury, Nations Trust Bank. A very, very good evening to you.
Good evening to you, Nizanga.
Right, to start things off, can you first explain the treasury function in a banking environment and its key responsibilities?
Yeah, Nizanga, treasury is a very unique entity or a division. We have both revenue responsibilities as well as kind of a risk management responsibilities when it comes to banking operations. In my list of priorities, I would basically put liquidity management as one of the key responsibilities that is entrusted on treasuries. Just to explain that, when a customer walks into a bank and wants to withdraw money or transfer money out or liquidate a deposit, we can't say you come tomorrow because we don't have money today. Because if you do that, it basically creates a permanent dent in your reputation, and that will basically lead to the downfall of your institution. So therefore, when customers walk in, we have to basically meet their liquidity demands. Now, this particular responsibility is shouldered by the Treasury. All the fund inflows and outflows from the bank and to the bank are channeled through the Treasury. Right. And there is a specialized desk which manages this function, and they ensure that the bank is operated under optimum liquidity levels. Having said that, we can't keep excess liquidity also, because then it will be unproductive. So it's a fine balance that we have to maintain in the Treasury. So it's one of the key responsibilities we have. Now, in addition to that, we also have certain other functions, revenue functions, like proprietary trading. Then we basically provide product services to our customers, especially on treasury products. Then there is another interesting area which is also linked to the liquidity management aspect of it, but it's called assets and liability management of the banking book. So these are some of the key areas that we deal in.
Right, so you explained what the main functions of a treasury are. Can you explain further on proprietary and product functions?
Yeah, if you look at the treasury products, I think you can basically categorize them into two main areas. One is the fixed income side of products. The other is forex products. If you take fixed income again, you have the capital market products and the money market products. Now these differentiations are, brought about through various parameters like, duration and tenor and so forth. Now, all these treasury products, again, it's a specific feature of these products, are tradable, meaning you can buy and sell those products in the market. Now, if you do this trading activity for your own self, on your own accord, then we call it proprietary trading. Now, this is basically carried out by the traders in the dealing room. They continuously, buy and sell fixed income securities like treasury bills, bonds, debentures or corporate debt, etc., or even, forex, foreign exchange deals. So then that is a proprietary side of it. And at the same time, customers also would want to basically engage in these kind of transactions. Now, in such situations, we call them, or rather, I'll just explain it to you through an example, like say, an import customer who wants to retire his LC and pay the bill. He walks into the corporate banking RM and wants to basically say, I want to buy dollars and retire my bill. Now, at that point, the corporate bank would not have the product capability to service the customer. They in turn turn to the treasury, and the treasury will basically provide that product support. Similarly, like a customer walks into a branch and wants to invest in a treasury bill, again, the branch will not have the product capability. They will turn to the treasury. Now, these kind of product services that we provide is called the product function. So we own the treasury, all the treasury products, we manage them and service the customers.
Right, so as you just explained, we understand that there's a whole range of products handled by treasury, the treasury. So can you talk about its main products?
Yeah, again, I have touched upon some of these areas already, but just to move on, like if you take forex, we all know the spot and forward FX that we trade, and customers also basically deal in such products. Coming into fixed income side of things, we have capital market products where the tenors are a little longer, like 1 year and beyond, goes up to 5-10 years. These are called treasury bonds if it is issued by the government. If they are issued by the corporate entities, then we call them debentures or corporate debt. Then coming into the money market side of things, those are the shorter tenor instruments. Again, we have like trust receipts and commercial paper, reverse repurchase agreements and so forth. So these are some of the basic products that we have in our market. In addition to that, we also have things like derivatives, options, swaps, interest rate swaps, and so on and so forth.
Right. So asset and liability management is a key element in a financial institution. So can you talk about how asset and liability management take place?
Yeah, here again, different institutions have different approaches to assets and liability management. Like most of the international banks and even the bank that I work for, we manage assets and liabilities within the treasury, because that also has like a risk management function as well as a revenue generation ability. So in our case, we basically carry out both. But in certain other institutions, it could be even managed through like finance division. Now here what happens is, like, if you look at a balance sheet of a bank, we have deposits on the one hand and loans. I mean, to make it simple, I will just go through those basic products. Loans on the other hand. And these loans have different tenors, different amounts and so forth. Similarly, deposits also will have different tenors and different maturities, different amounts and so forth. So if you put these two together, you will see there are so many gaps in the balance sheet. We call them liquidity gaps, we can call them interest rate gaps. And when you have these gaps, it basically gives rise to risk.
Right.
So basically management of that risk is the function
right.
handled by ALM.
Oh, right. So my final question to you is, as an individual with experience over a decade in treasury, what advice can be given to people in the field of treasury?
Yeah, that's a very pertinent question, Nisanga. Thanks for asking that. Because, you know, I think we have basically come across certain unfortunate incidents in the past as well. But as far as I'm concerned, I mean, I've been in, as you said, for a long time in this field.
Yes.
And one of the key aspects of our business is integrity. We need to be basically look at the long term, professional existence. We can't basically take shortcuts and take short-term gains. You know, there are so many things which happen in the market. Unfortunately, I mean, these hit the headlines as well. So my one advice is be professional, be ethical, and, you know, continue in the long run. You will succeed eventually.
Thank you very much for being with us today and for your valuable insight.
Thanks for giving me this opportunity.
Right. With that, we got to wind up for today with the promise of seeing you next week, same time on Channel I. Until then, take care and good night.